Welcome back to the Valisights Podcast, the show for accountants, FP&A leaders, controllers, and CFOs who want to clarify financial operations, have actionable insights, and real-world wisdom to guide smarter decisions. I'm your host, Albert Ramos. Today's guest is someone who's made it a mission to challenge conventional financial reporting and transform the way SMB executives interact with their numbers. Ed Patton, you've probably seen him on LinkedIn. He's the founder and CEO of PattonTrender, a platform built on the belief that financial fundamentals should reflect business and economic reality and be clear, concise, and comprehensible for decision makers, not just accountants or auditors. With decades of experience advising SMBs, Ed has distilled a common sense methodology that strips away confusing jargon and brings decision makers the true story behind their financials. From redefining cash flow statements to introducing frameworks, as you'll hear about them, the 10-second rule, as well as the 5 elements of financial fundamentals, Ed's work is reshaping how small and mid-sized businesses evaluate capital, liquidity, and operational performance. In this episode, we dive deep into why most SMBs are flying blind when it comes to financial clarity, how GAAP cash flow statements fail leaders and what to use instead, the power of the 10-second rule and the 5 elements of financial fundamentals, how to restructure cash flow and liquidity reporting for better insight. I can't wait for this. Ed's real-world tested methods for surfacing decision-ready financials and why clarity, not complexity, is the ultimate sophistication in finance. And finally, if we have time, Ed's thoughts on Valisights, our AI-powered FP&A and strategic finance platform. Let's jump right in. I know that was a mouthful, Ed, but we're ready for you. Let's get in. Ed, welcome to the Valisights Podcast.
Thank you, Albert. I'm glad to be here, and that's a great introduction. You covered a lot.
My pleasure, and I could have gone longer because you have a ton of knowledge. We've had a couple of chats now. Can't wait to jump right in. And there was actually questions that came in from LinkedIn as we were getting ready for this, so can't wait to ask. Well, let's start off with your journey. How did your journey in finance lead to creating the PattonTrender system?
You know, Albert, it was an evolutionary process, and as we all go through, we build on what we learned before, and so started off traditional accounting, learned a lot of that stuff, worked in investment banking, worked on a lot of capital transactions, and always worked with small to mid-sized businesses, which range from early stage to about 100 million in sales. And so there's a common theme amongst many of those businesses. I'm sure a lot of people watching this will appreciate this and understand this, which is the executives, the decision makers, the founders, the owners. A lot of these SMBs do not understand their big financial picture. Right. And so that's something I noticed was missing, and so just continue to work along those to figure out a solution to that. And so over time, it's finally I've come up with a solution.
I love it, and I really appreciate not only your experience, but definitely as I looked into and lifted up the hood to PattonTrender, there's so much there. To your point, the entire ecosystem of the business. And you mentioned it, you posted it on LinkedIn too, that typically SMB executives, they're flying blind. They have no idea directionally or actuals of what's going on under the hood of their business, especially as you get into the weeds. What did you mean by that though? As far as executives, they're flying blind and they need help.
No, that's right. The executives they're smart people, they're creative people, they're successful people, and what they focus on is what which we all do. We focus on areas we appreciate and like, and that is the operations, and that is basically it's the P&L, and that's the focus. And so the reason that's a focus is a couple of reasons. One, it's the business, and two is it's logical and easy to understand. But when you get outside of the P&L, these executives really start to get into an area they don't understand. Right. And so there's 3 basic financial statements, as we all know. There's a balance sheet, a P&L, and a cash flow statement. And the big picture is the executives of these businesses understand one of those three, and that's not a healthy situation. And
Absolutely.
so they understand the P&L, they do not understand the balance sheet, they do not understand the cash flow statement. And so when you're striking out 2 out of 3 times at bat, that's not a very good average. And
Right.
so that's what I've worked on, is to make all three fit together and make them easily digestible for the business executives.
It's such a good point, and I love that you start with the foundation. All right, the P&L, the balance sheet, the cash flow statement. Many of us in the finance world, we understand it very well. However, when it comes to some of the decision makers, especially in ops, COO, right, your CEO, C-suite, or your executive vice
Sure.
presidents, we start to miss in those areas that the financial literacy sometimes is not as strong. And you mentioned a lot on LinkedIn too around just the common gaps, and why you developed the PattonTrender system is there's these common gaps that you found from many of these leaders or within these companies that really stood out. And what were some of those as you dug in deeper into some of these familiar names and these statements? What were some of the things within the operations or within the financial arm that were common amongst all the different enterprises and companies you've supported?
Well, I mean, that's a great question, and one, I didn't understand them, and so I could not articulate it back to the business owners if I didn't understand it. And so I had to peel that onion back and make them simple, 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 to where I could understand it and I could articulate it to a business person who was not a finance person. And so, just keep peeling that onion back, making it simpler, making it simpler, making it simpler. So through that process is where this thing evolved and came about. And now, Albert, I'm not sure I answered your question. So, but the whole idea is to make the full financial profile, the big picture, as simple as possible. And that then takes a whole other direction of we talked about the 10-second rule and the 5 elements. So
Right.
that's it.
I want to jump in. Actually,
Sure.
you answered the question. I think it's going to be even better when you walk us through the 5 fundamentals or the elements of the financial
Sure.
fundamentals. Walk us through that, because I think that's where there's so much value there too, and what you've created.
Okay. Let me let me tease you a little bit, and that is when you talk about financial fundamentals to accounting and financial professionals, and you ask them when I ask them what are financial fundamentals, the initial reaction is there's a deer in the headlight look, and because not much thought is given to financial fundamentals. They're given to create the basic financial statements, to slice and dice the P&L to many degrees. But
Right.
as far as financial fundamentals goes, they're really not defined. And Albert, I know you've got a football background to you, and so what are the fundamentals of football? Offense, defense, special teams, blocking and tackling, whatever they
Right.
are. And if you're a football coach and you don't understand the fundamentals, you're not going to be very successful. And so it's kind of surprising that in the business world, financial fundamentals are not really defined. And so the Trenders it's defined them, it's calculated them, summarized them, and reported them. And so before you can even talk about financial fundamentals, you got to define them. And
Sure.
so the Trenders have defined them. There's the 5 elements. It's cash flow, operating earnings, and that's really the kind of the inside of the business, the P&L side and the cash flow side. And then there's the capital side. And the capital side is short term and long term. Short term being liquidity, long term being shareholder values and borrowing capacity. And so those 5 elements are cash flow, operating earnings, and then the capital side, which is liquidity, value, and borrowing capacity. And really the cash flow and the operating earnings side feed the capital side.
Right.
And the capital side is really it's like a bigger ship. The P&L and the cash flow are much more nimble. They move around a lot each month. but they drive the capital side, and those sides are bigger and they move slower. So
Yeah, and so specific to the cash flow side, let's double click
sure.
on that one. What from a foundational cash flow, what is it, and then how does it differ within the patent trender, specifically in that category? How does it differ from traditional metrics? And then what have you found? What are some ways to? And I know every industry is different and every
Sure.
company is different, but in general, why do most executives, again, if they're trying to figure out cash position and cash flow, why do they misunderstand it, and how can they fix it?
I believe they misunderstand it because the traditional cash flow statement, the GAAP cash flow statement, is ineffective. It
Mm,
mixes apples and oranges. It's a which is a whole nother discussion in itself. But I've got to have two proprietary reports. One is a cash flow statement, and the other is the liquidity calculation
right.
in dollar amounts, not ratios. But the the cash flow statement that I have has something called foundation cash flow, which is it's sort of that magical or mystical cash flow that all accountants and finance people have talked to amongst each other, and that is what would what would the cash flow of the business look like if working capital wasn't components weren't there? And that is, if your sales immediately went into your bank account, if your expenses and costs immediately came out of your bank account, what would that look like? And
Mm,
that's basically that is what foundation cash flow is. And so it's really all the activity of the business cash activity without the working capital components. And so anyway, that's what foundation cash flow is. It's really the reciprocal of working capital, and we all know what working capital is. It's current assets net of current liabilities. Well, foundation capital is something I've termed that is the reciprocal of working capital, and it's the non-current portion of the balance sheet.
got it.
So it's non-current liabilities and equity net of non-current assets. And you know, people are probably thinking, well, what difference does that make? Well, those two numbers are the same. The working capital and the foundation capital numbers are the exact same number. The reason is because a balance sheet balances because the debits and the credits equal each other. That's why a balance sheet balances. So anyway, the foundation capital is those non-current portions. It's the same dollar amount as the working capital, but also the foundation cash flow is the changes of those non-current balance sheet items. And that's the non-current portion of the balance sheet is where the real business and economic
Mm,
activities are parked on the balance sheet.
yeah, spot on.
The equity section has the net P&L. The fixed asset section has capex in it. The debt portion has term debt activities in it. So really, that's really the business. That's the economic and business activities of the company. The working capital is really those are holding tanks. Those are the tail on the dog, and so what you really want to see is what's happened to your foundation capital, foundation cash flow, each month, because that's really your business activity. And oh, by the way, whatever happened there, then what happened to cash? The net
Mm,
difference is only the working capital components. And again, working capital components are the tail on the dog. They're the holding tanks. They're really they're they're not as important as people say they are. They're big dollars, no doubt about it. You have to manage them properly, collect your receivables quickly, turn your inventories as fast as you can, manage your payables as best you can. But they're again, that's the tail on the dog. The
right.
real business is down on the non-current portion of the balance sheet, and people don't recognize that. And let me tell you, the owners don't care. They just want to know how am I doing. And so
Exactly.
so
How's the checking account looking like?
it,
So I think a lot of people are going to agree with you there, and I'm sure we'll have some questions. I can't wait because I know you'll be able to answer and walk through that some more. Now, the one thing that I know will come up, right, is the whole idea of this GAAP compliant cash flow statement or forecast. compared to what you've developed, which I think you have a lot of value there. However, I still think, and I want to make it clear, and maybe you can clarify it, it's still GAAP compliant. It's not necessarily saying we're throwing that out of the window and it's not compliant. There's still integrity in all of the things you're bringing up, but you're looking at it in two different ways, from cash flow, and we'll get to the liquidity part of it too. But can you walk us through that around just how do we simplify this GAAP compliant report without losing the integrity specific to what you've created?
Well, the trenders they're just built off the existing balance sheets and P&Ls of the business, and so there's really not anything different. The only difference is on the trenders is the non-current portion of term debt is put in the long-term portion. Otherwise it's the exact same numbers as the internal financial statements, which at the end of the year they're audited, and so they all tie to each other. But it's a matter of how do you group the numbers together, and how do you report them to Mr. Jones, the owner, so that he gets it and
Right.
It makes sense to him.
Well, let's go back to, and you kind of mentioned in the beginning, many owners understand the P&L. However, there are at times just misconceptions that business leaders have about their P&L, and you post a lot about that on LinkedIn. Can you walk us through some of the biggest misconceptions that are out there specific to just executives as they scrub through or review their P&L?
Yeah, Albert, a lot of executives, they think the P&L is the business. They think it's the full financial picture of the business,
Right.
and it's not. So that's the misconception. And
Yeah.
so, again, I'm going to come back to the trenders, but what they do is they look at the operating earnings side of the P&L. And again, the trender cash flow statement, like every cash flow statement, at the end of the day, it shows the change in cash. If you start at the month with $100,000 and you end the month with $75,000, well, the cash flow statement shows
Delta.
a decrease of cash of $25,000. Right. The GAAP cash flow statement shows that. The trender cash flow statement shows that. But it's just a matter of how they group so that it's more easily comprehended. And so and again, what the GAAP cash flow, what the trender cash flow statement does, it shows operating earnings. It shows then non-operating items, which are then segregated between the P&L and the balance sheet, such as interest expense or taxes or CapEx, changes in term debt. They're all on there, but they're just grouped in a different way so that the business owner looks at it, and then it's graphed out to where you can see those few categories. Oh, and then by the way, at the end of the deal, you've got working capital changes. So right. At the end of the day, you've got the net change in cash. But with this, the business owner can say, oh, operating earnings. Yeah, I get that. That's the business. Non-operation. Oh, I see. We had a distribution. We had a debt service payment. We had CapEx, whatever it is, where they can then see those are different than, than just the P&L or the net P&L.
Yeah. And a hot topic, just sticking to the P&L for a sec here, the income statement, is how do we actually assess profitability? You've been very vocal about this, right? And I still think just across our industry, it is a hot topic, right? Is what is true profitability each month or each quarter or throughout the year? How would you define and calculate true profitability?
Albert, I don't really look at true profitability. I look at operating earnings, but of the trender statements, the first one that's on there, the first item on the report card, everything each month is the cash flow. And so, so really I look at what is your foundation cash flow. That's the first number I look at, not your profitability. Now, then how much of that foundation cash flow came from operations, and then how much got brought in or was consumed by non-operations. And so, but again, I look at the foundation cash flow first, then peel that onion back a little bit. How much was from operations? How much was from non-operations? Then after you go through that, oh, I see. Then there's also some working capital components. Receivables went up or down. Inventories went up or down. Payables went up or down. So I don't know. Does that It's a good question. I hope I didn't
No,
get.
you're spot on. What I love about it though, and you say it directly, it's like, look, I'm not looking at the what we're used to looking at profitability. You're looking at the actual operational cash flow, et cetera, there. And I think you're spot on, right? And maybe even looking at both. But what we're saying together is that many executives aren't looking at it that way, and they need to be. And so I appreciate you sharing that. And you have tools that allow you to see it right then and there in a comprehensible way. And I want to move into the balance sheet because that's huge, right? To your point, the income statement or the profit and loss P&L is typically what is like what's used. But again, to your point, if you're truly lifting up the hood and you want to know the health, the state of your business, it's not solely there. That's just one aspect of it. You got to move into the balance sheet too. And what do you think? I mean, how would you recommend and how do you coach, others that you serve, other executives that you
Sure.
serve, decision makers around using the balance sheet to have some of these monthly performance conversations?
Well, that's a great question. Oh, these are good questions. What good, Albert. But the three basic financial statements are all interrelated. And then also, you said, how do you open the hood? What do you look at? There's an analogy I like to use, and that is all three basic financial statements are important. And I like to use sort of a crude analogy of an automobile. And so, that is, I'm in San Antonio, you're in Houston, we're about 200 miles apart. So that if you want to get in your car in the morning and drive over to San Antonio, you're going to have all the parts of the car working together to work properly for you to make it from Houston to San Antonio.
That's
That
right.
is, so you can't really look at what's the most important part of the car, just as you can't look at what is the most important financial statement. With your car,
They're all
the most
interconnected.
important part, is, I'll be silly about it, is the front left tire, the back right tire, the steering wheel, or the gas tank, or the engine. If any of those are missing, your car is not going to get you here. And
It's such a
so,
good point because typically when I'm looking at existing models that I've created, when I'm helping
sure,
some of our businesses out or clients out, and I'm looking at some of these models, again, there is in most cases, and I always press on this three statement model, and I'm sure you do the same,
sure.
especially with your tools here, the PattonTrender system, is there's never a connection between all three statements in their model. I'm like, wait a second, this is not a good depiction of your business or even how you're forecasting modeling it out because it all has to the beautiful thing is that it does all connect. However, most don't treat it that way, right? If you want an entire true, and we'll get to capital here in a sec, but when it comes to the three statement models, your forecasting model should connect all three if you're doing it appropriately.
Yeah,
So
and Albert, also that's right, but also the executives who are making the decisions to run the business, they have to understand it.
right.
So it's one thing for the accounting or the financial people to understand it, but if the decision makers don't understand it, that's where you get a big disconnect. And so that's
Absolutely.
where the simplicity, it all comes full circle. That's where the simplicity comes in.
We talked a lot about working capital, and I know you have a section within your five elements specific to capital, but let's talk about foundation capital and, to your point, the short to long term capital type of vehicles and injections. Can you walk us through that? What do you look for when using your PattonTrender system?
Well, what I look for is, again, there's those five elements of cash flow, operating earnings, liquidity, term or value, and borrowing capacity. So,
Right.
the cap, really what I look for first and foremost is the liquidity side.
Hmm.
And so there's a dollar amount of liquidity, $100,000, whatever the number is. And there's a calculation, there's a table that calculates that. That's real easy to understand. Then there's how much liquidity does a business of your size need? And so, it's all graphed out, so you get to see here's the liquidity, the financial health of the business, and here's what it should be for a company that size. Are you above that number, below that number? Are you at or approaching zero? Anyway, so those are the things, and every business is different. Every situation is different. So, that's what I really look at first to say, you know, are you financially healthy enough are you? And if you're not, what are you going to do about it? how are you going to fix that? And so,
Right.
that's a whole nother conversation. That's a whole nother, set of discussions and discussions going on.
Well, and I want to jump in a little bit more there because a lot of the tools and the 5 elements actually provide great trends and actually flag anomalies. However, if an organization or executive decision makers aren't looking at those things, what are the dangers, do you think? Like, what are some of the risks of not having this type of information? One, the education, but also two, the KPIs, high level and within the weeds. Like, what have you seen? I mean, is that a business going out of business? Like, what is it? What are some of the risks?
Well, of those 5 elements, and again, they're graded, and so if they're in good shape, then you're okay. You don't worry about it. You go focus on something else. But if they're not in good shape, if you got a problem,
Mhm.
that's where you need to start focusing. And
Right.
so, uh, again, Albert, when to me, it's so easy because you see the trends and the drivers, broken down in just very few numbers, and so you get to see that high level view, and that is, so if you got a problem, let's go focus on the problem, and the executives see that it's a problem, and,
Right.
and so there's not pushback or a fight. It's a problem. Now, how do you fix the problem? I don't know. That's the whole discussion with management, and then you start modeling it out and playing the what if games.
Right.
First of all,
Scenario based.
where do you need to be focusing? And if something's not broken, you don't have to worry about fixing it. If something's broken, then you have to fix it.
But to
And
your point, it's without some of these tools, right? You don't necessarily know the health of or the state of the state. Again, many just focus on the P&L, and if you're just doing that alone and that's it, you don't technically know the health of your business because you're missing a ton of other areas that are very important. To your point of the analogy of the car, right? If you're just looking at that left wheel and that's it, good luck, right? Good luck getting to San Antonio.
yeah. Well, and also, Howard, it comes back to the beginning of this discussion: flying blind.
Right,
This is why a lot of executives are flying blind. Not that they want to; it's just they've never been given the tools to be able to see the big picture in a way they can understand.
sure.
Um, and it goes back to, we talked a little bit about the 10-second rule, and
I was
and
going to get to that. You have a great technical background as well, and so I wanted to get to that. Let's jump into
okay.
the 10-second rule and what does it say about accounting, any accounting best practices, or even bad practices. What are your thoughts there?
Well, first of all, I developed this because in the 10 seconds are those 5 elements. The Trender package has I keep coming back to that. I apologize, but
No, it's
it
great.
has a monthly report card, which is a traffic light grading system of red
I
light,
love
yellow
that.
light,
Yeah.
green light, and so those 5 elements are numbers. We sit down with management and we say, if you're above, and we develop these numbers jointly with management, and so if you're above this number on foundation cash flow, you're green light, you're healthy. If you're below whatever number it is, then it's a red light and you got a problem. So in between those are the yellow light. And so that's where, there's those 5 numbers are, you have a red light, yellow light, green light. So you can look at that very easily. And that's where the 10 seconds comes in, especially after management's been using the trenders for a few
Right.
months and they're comfortable with it. They go through a learning curve. We go, as any business, you go through a learning curve with your client, and then once they're there, they can, in 10 seconds, they can see, where they are, and then that starts to, that leads to other discussions. There's
Yeah.
all drill downs but also where does your focus
I need
need?
my 5 green. I want my 5 green.
No, everybody wants 5 greens, but and and actually it's kind of funny. They're objective numbers, and this thing's evolved. But when I first did it, they were subjective numbers, and then that's where we'd get into discussion of, let's grade on the curve. You're being too hard on me. So
Mhm.
uh, that's where we said, okay, let's just have objective numbers, and that works a lot better. Yeah, it's one of those things when it's new, you're going to evolve and learn and get better at it.
Well, one of the questions I got from LinkedIn, and please share what you can,
Sure.
right? Because I know in our world, especially in the consulting world, there's a lot of confidentiality, which is appropriate, and I
Yeah.
respect that. But do you have a use case or story where you were applying the patent trender system to an organization that just where it uncovered a couple major blind spots, and how did it solve for? Is there anything you can maybe anecdotally can
Yeah,
share?
yeah, no. There's, we all, once you've been around, you have a lot of war stories. So
Yes,
there's a lot of that, and
the goods and the bads. Yeah.
yeah, but yeah, actually there are some good and the bad. So I don't want to just say the bad. There's the dramatic stories that go,
Right.
oh man, look at that. But then there's kind of the more day to day stories of the executives just understand their financial fundamentals, and so you get in your car, you turn it on, it drives perfectly. So there's no drama there, and but there's also the drama that does. And there's plenty of dramatic stories. One is the cash flow. The trender cash flow makes it so easy to see, is your money coming from operations, non-operations, or coming or going to non-operations. And if it's non-operations, you drill down and see that. Company a few years ago, they've now sold, so it's okay to talk about. But they had 4 operating businesses and a corporate overhead office. So the owner really didn't, and they were doing 20 something million in sales, I think.
Mm-hmm.
So the owner, it had really gotten away from him to understand, understandably so. Smart guy, former investment banker out of New York, really bright guy. But so we looked at this and said, you've got a lot of CapEx each month. And he said, no, we don't. Because he, like so many, he had looked at the P&L.
Yeah.
Well, here are the trenders. It's showing there's money going into PP&E each month, which by definition, that's a CapEx. And so I said, that can't be right. So I got the controller to come in, said, last month you had, one of the businesses, you had 25 or 30,000 in CapEx. And he goes, oh, no, that's not right. So the controller came in. There's some hemming and hawing going on. I said, look, just go get a printout of what went into PP&E last month.
Right.
It was a 1.5-page printout. And the one thing that I really remember, there was a $29 repair to a faucet in one of the bathrooms. And so what caused all of this over time, the managers of these different businesses got bonuses based on profitability. And so that's where the focus was. And they finally figured out that's all he looked at. And I think this thing grew and evolved over time.
Sure.
So, it's not creative stuff in the scheme of, trying to play with your numbers, but they were taking
within your tool was able to flag the anomaly where one of the leaders didn't even know what was going on.
So they were putting expenses into CapEx, and so it didn't hit the P&L. Their bonuses were bigger. The owner was happy. Everybody was happy.
The good old principal agent problem there. Yeah, it's incentives, and sometimes people do some funny things.
Well, and if you're not looking at the full financial profile, it can happen. Another one was a company that was their liquidity started to decrease, and they sold granite slabs, big granite slabs, and so and they were doing about 10 million in sales, and so the liquidity started to decrease. The reason was their inventory started to grow, and the owner always knew he had a lot of inventory, and he liked it because it was part of his selling marketing deal where
the variety,
the people building the house, the interior designers could go see these beautiful big marble slabs, and it was a good sales tool for him. And so he said, look, that's just part of the deal. I'm going to have extra inventory, or have a lot of inventory. I said, okay. And so, but then it really started to go up, and the liquidity started to go down. And so really what red flagged it was not so much the high amount of inventories, because he'd always had a high amount of inventories. So that never bothered him. But the fact is, I said, here's your liquidity going down, the trend you're going, you're not going to be able to pay your bills before too long.
Right.
That got his attention. So he went in, so we started looking at it, and most of the most of the slabs came from quarries in Brazil, and so they would. They started a couple of quarries. I think there's some economic problems in Brazil. They started shipping more and more to him, and I'm sure to other people too. And he didn't realize, but he was getting shipments in that he didn't have a purchase order for.
Oh no.
And so the slabs would go from Brazil to the Houston Ship Channel to a truck to San Antonio.
The good old switcheroo.
Yep. So yeah. So anyway, so he hired a guy full time to just manage the quarries. And so they said, if we get something here that doesn't have a purchase order, we're telling it to head back to the Houston Ship Channel and it's yours. We're not taking it. So sure enough, you start looking at the truckloads that come in, they're going down, 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 down. Inventory's going down, liquidity going up. So, and just one other example, which was a good example. We looked at
these things happen, right? These things happen, but if you don't have the tools, right, to catch some of these things, they sneak right in, and it's these things add up. Whether
these are all, they're all smart people, they all have successful businesses, but something happened, and so one other one real quick, and that is we looked at the values are part of the 5 elements, and so told the owner that you've had a really good series of months here and your value's gone up. And so that his whole idea of the business then changed. He hired an investment banker, went through a long process, but ended up selling the business. And it was because he started to realize there's a lot more value here than what he'd had in the past. So that was a good story.
Two great use cases and sometimes there's just waste in there. There's things that are adding up from a cost perspective or some funkiness, right? When it comes to incentives to either let it hit the P&L or maybe it goes over to CapEx and no one will see it. We're going to bonus off our profitability. It happens.
But the stories are as different as businesses are, as the personality of the people are. I mean, they're all different. And actually, if I can't say we talk about Valisights, but this is where, this what I tell people, the trenders don't replace effective reporting. They're in addition to and not in lieu of. And I just think, this with all the tremendous information that Valisights brings, I think those two fit together, kind of like the front left tire and the back right tire. You need both.
Yeah, no, and we're so lucky that we had an opportunity to have you here on the show because we see the same thing. And for those watching from PattonTrender and the fundamentals, I still think even till this day, and maybe it's the education system or just things are moving so fast and changing so fast, there's still this level of education and financial literacy that's just missing out there in the business world. And some of the most successful business still, when you lift up the hood, and you've seen it, Ed, that you're just like, wow, like fundamentally, we're just not there. Although P&L, sure, it looks great. But if you look at all the different flags and you have I love it, the red, yellow, green, like give it to me real and easy. I needed all 5 green, but you're saying, as you see some of these businesses, they're 2 for 5, 3 for 5, 1 for 5, and they're not looking at a business as a whole holistically that way. And that's what I love about your system. And, with Valisights, we used AI and technology to get there even faster too. So
I know. No, it's great. It's great. And also, let me say that this kind of doves into the need for Valisights, but the GAAP pronouncements, they've all become so complex too.
Right.
And so it's almost gotten to be like the tax code. I mean, it's getting so complicated. Just to know those things is one thing, but then you lose sight of the big picture as you're going through all that complexity.
When you look at the rules, and I was just looking at it again this morning, and I look at all the ASC codes or compliance codes and all of that. Yeah, it can make your head spin. Yeah. And so what I love about what you do too, specific as you deep dive into cash flow, into the 3-statement model, into capital or borrowing capacity. For instance, Valisights has this thing called Comply IQ. We want to make sure the books are clean, right? So from a GAAP analysis to your ASC compliance, revenue recognition, we jump in, we lift up the hood to your accounting because Everything after the fact needs to ensure that we have clean data. And we hear this all the time out there, LinkedIn, elsewhere. We know this being in it. The data has to be clean. If the books aren't clean, nothing else matters, right? And the great thing about PattonTrender as well as Valisights is we will flag, we will find, and it's obviously benefiting.
Hey, let me make one more analogy if I could, because it fits in with both the trenders and Valisights too, and that is, if you look at, if I can hopefully tell this well, but just take 100-acre forest, the big 100 acres of trees, and so there's somewhere within that forest, there's 5 trees that are sick and need help. And so there's 2 ways to go find those trees. You could just walk all through the forest and look for and eventually find those 5, or just say you can get a drone and fly oversight, and then you'll see the big picture. Right. And there you'll see the problem. Same thing with the trenders, same thing with what you just talked about. And that is, you could start going through all the minutia and all the information that's there, and you'd eventually get there. But why not use AI, use the trenders to get there a lot faster? And that's the beauty of technology.
It's so spot on, right? So I think there's this educational, foundational, financial literacy opportunity.
Exactly.
And many watching today will be nodding their heads like, yep, that's what we're trying to solve for. And we still have a lot of work to do just as a group to get more leaders, decision makers to understand the fundamentals of finance and the health of their business. And then to your point, the second piece is, okay, so how do we, once we're educated, we understand, we have the right tools like Patton and Valisights. Now, how do we create speed and precision? And for all of us listening, ourselves included, Ed and I, is how do we do it with less of the manual work and allow the intelligence to help us get there faster, to provide a better quality deliverable with less. And I think we're moving away. I actually had a show with Irene from Account Groove on, we're moving away from the billable hour because the technology allows us to get things done faster. We're moving into value-based, maybe even retainer or subscription-based services, right? So we really got to think about that is how do we learn these tools? How do we make sure we educate these organizations or these leaders through financial fundamentals like PattonTrenders and how you laid those out, right? And also get there faster so that we can serve more people. Because the problem that I'm finding with accounting firms that are out there listening, or fractional CFOs and some others, is our capacity to acquire and to scale is so difficult. Although I think private equity, I'm sure you've seen it, Ed, they're starting to come into our world here because they see with a little bit of technology and obviously some operational efficiency, we can scale this to a much larger situation and get better returns. So I'm excited about that. It's been a lot of fun.
Literacy is financial literacy is a great word. And there's also, there's education and training that goes with it too. So, but instead of doing the trainings just to fill out a tax return or how to do an audit, let's also start looking at the big financial picture and the other financial side of the business.
Yeah, absolutely. Well, I'm excited because I know you've had an opportunity to see Cash IQ, which is our AI-powered 13-week cash flow, right? And then coupled with the way you look at the business too, I mean, we're helping a ton of people out there. So I'm looking forward to people reaching out to you or even Valisights as well to learn more about this, the PattonTrender system as well as Valisights. But what I'm really excited about is just to know what's the ultimate vision for PattonTrender and the future of what you say, financial clarity. It's a must. What's the ultimate vision here?
I would like to see the ultimate vision would be financial fundamentals are ubiquitous with people reviewing their business each month. I mean, just that they look at that from a big picture standpoint, and that's part of their whole process. Is let's don't start digging into just the P&L or the detail. Let's look at the big picture. Then let's do all these other aspects of it. So that's my wish list.
This was so good. And you mentioned big picture. We have to understand the state of the state and the health of, right? Dashboards are great. And there's a lot of dashboard companies out there, right? And actually some will be on the show. And I can't wait to have them on because, yes, there is a place for data visualization.
Absolutely. It all works.
What you're saying is we don't need more complexity. We actually need to understand how do we use the financial intelligence coupled with the actual fundamentals of the business. And that's where you've done such a tremendous job and have helped out so many people, including those decision makers that we mentioned. And so I'm excited for people. Oh, go ahead, Ed.
Well, no, I was just saying I'm thinking about just all of this is important. And it's a big market and it all fits together. It's sort of like that car. You can make sure all the pieces are fitting together. If you're just selling one piece of the car, you're not going to get, somebody down the road. So
I love it. Yeah. And I think that actually clarifies, because I know there's a lot of confusion out there. Is it this or that? And it's actually, no, these are all coupled within your financial back office or front of office ecosystem. Right. So just know, and reach out to us if you're looking to gain more confidence here and just understanding. A lot of people are calling it the financial tech stack, or what are the layers of my back office, or how I go and attack or an organization as I do my assessments. And all of these are important, right? Again, this is not to say dashboards aren't important. They are important because you want to directionally know. Similar to the PattonTrender and the red, yellow, green, very similar to that. Now, the Trender system actually provides the foundational items. A dashboard is not necessarily going to get you there full understanding, right? It's just pointing, and it's notifying you or alerting you on where things are going and what's good, what's bad. But you need that foundational system. You have to understand all aspects, not just a P&L. You have to understand all aspects of the business. So that's PattonTrender. And then where we come in, Valisights, is how do we get there with more precision and speed so that you move away from this billable, you get away from manual, and you get to it faster. It's just, it's all coming together. I love it.
Yeah. And I would tell a business owner, don't just use the trenders, use the trenders, use dashboards, use values, use all of these tools. And anyway, so that's, we're saying the same thing.
It's so good. Well, if people wanted to learn more about PattonTrender, about you and your organization, where can they find you?
Sure. I've got a website. It's PattonTrender, one word, Patton, trender.com. And so that, phone numbers there, email, all that kind of stuff is there. So, look it up there. And by the way, I call them Trender because my clients started asking, they see the trends. When are October's Trenders going to be ready? So anyway, so that's where the name came from.
There's that catchphrase. I love it. Well, PattonTrender, excellent. Ed, thank you so much. This has been so good. Thanks for providing a blueprint on just moving away from the confusion of where am I at with my business to offering leaders the education, the foundational aspects of the financial health so that they feel confident about the decisions that they're making. And I'm excited for finance leaders out there, if you're looking to integrate also not just PattonTrender, but also any AI-powered financial modeling, cash flow forecasting, and strategic FP&A support, reach out to us at valisights.com. We'll make sure to offer you a free demo.
Howard, this has been great. I can tell you're a thorough guy. Your Valisights is thorough. This is all. You do a great job of bringing out the most important things.
Well, we're lucky to have you as a guest, sir, and we'll continue to touch base. And I know many will reach out to you as well. So you've been so good.
Well, thank you for having me.
My pleasure. Well, everyone, this has been the Valisights Podcast. As mentioned, I'm your host, Albert Ramos. Ed, thank you. And everybody, we'll see you next time. Thank you so much.